Hello, I'm Rachel and you're watching Kalkine TV live from Sydney, and this is the Economic Corner Show, where we update you on all the biggest global economic announcements. First up on the Economic Corner today is a news update from Iran. Ebrahim Raisi, Iran's hardline judiciary chief, won a landslide victory in the country's presidential election. Raisi won 61.95% of the vote in Friday's election, on a voter turnout of 48.8%. Raisi will take office in August, replacing moderate President Hassan Rouhani, who was not allowed by the constitution to run for a third consecutive term. He is taking charge at a critical time as Iran seeks to salvage its tattered nuclear deal with major powers and also free itself from punishing US sanctions that have driven a sharp economic downturn. There were mixed reactions from the world on Raisi's victory. The United States says it regretted that Iranians were not able to participate in a free and fair electoral process in the country's presidential election. A spokesperson for the US Department of State said Washington will nonetheless continue indirect talks with Tehran on rejoining the 2015 nuclear deal. Meanwhile, Russian President Vladimir Putin congratulated Raisi and expressed hopes for further development of a constructive bilateral cooperation. Pakistani Prime Minister Imran Khan expressed his reaction in a tweet and said he looked forward to working with Raisi towards further strengthening of their fraternal ties. That's between Pakistan and Iran for regional peace, progress and prosperity. Moving on now to an important announcement from the Australian Trade Minister on China. China's anti-dumping duties on Australian wine have seen local industry exports plummet from around $1.1 billion to just $20 million. Trade Minister Dan Tehan said the actions taken by the Chinese government have caused serious harm to the Australian wine industry. The duty slapped on wines produced in Australia range between 116% and 220%, with China confirming in March that the tariffs would remain for 5 years. Because of this, Australia will now take China to the World Trade Organization over China's imposition of tariffs on the country's wine. Mr. Tehan acknowledged a WTO dispute could take between 2 and 4 years to resolve. He added that the Australian government would like to be able to sit down and resolve this dispute directly with China, but if they can't, Australia is prepared to go through the process. The decision comes amid worsening relations with Australia's biggest trading partner. It's the 9th dispute that Australia has taken to the WTO. Australia has already complained to the WTO over China's blocking of barley, one of several commodities that have become entangled in the growing rift between the countries. Moving on now to some market-moving comments from the Fed. Federal Reserve official James Bullard says that the US Central Bank might raise interest rates sooner than previously expected. President of the St. Louis Federal Reserve, Bullard, is among the 7 officials who saw rate increases beginning next year to contain inflation. The inflation, and now the US Central Bank will tackle it as the country comes out of the pandemic. It had been front and centre of investors' minds in the run-up to the policy meeting, which ended on Wednesday. Now it's time for a very short break. Stay tuned, I'll be back in just a moment.
Tune in to get the latest information.
Whether it's about market movements or the currency graph,
sectoral coverage or industry news,
we cover it all on our news segments.
Be on top of the latest news
with Kalkine TV.
Property by Kalkine. Looking for a dream home? Well, that may sound easy, but it isn't. And from looking for a property that is the right fit for you in terms of cost and other factors, to zeroing down on the right mortgage plan, there are various aspects to consider. And for the latest slowdown in the property market, tune in on Kalkine TV with me, Sage. I will give the latest updates on the property market as well as real estate stocks to help you make the right decision. Keep watching Property with Kalkine.
Hello and welcome back. I'm Rachel and you're watching Kalkine TV live from Sydney. This is the Economic Corner Show. Let's look at some news from the pandemic recovery phase. While COVID-19 initially started as a local outbreak in East Asia, it quickly developed into a pandemic. COVID-19 has far from run its course as numerous new cases are still confirmed each day. Especially in India and Brazil, the spread of the virus is still far from under control. According to Rabobank's COVID-19 economic dashboard, India currently tops the list of most new cases per day, while the virus is also far from under control in Brazil. Data on growth rates show a mixed picture, with some economies shrinking and other economies experiencing some quarter-on-quarter growth. On the other hand, vaccination programs are in full swing in the developed country economies. Israel and the UK and the US are well on the way, whilst the vaccination pace is picking up in Europe. Measures are gradually eased and sentiment indicators have improved markedly. Central banks have taken a slew of measures to alleviate liquidity and funding issues in markets, to prevent interest rate spreads from rising sharply and to support government bond issuance. Most central banks have cut interest rates and have announced liquidity support measures and re-established or introduced large-scale asset purchase programs. Some examples of this global impact are the initial decline in commodity prices, the drop in tourism and the drop in external demand. Moreover, changes in global risk aversion could cause capital outflows from the emerging markets, causing their currencies to depreciate and in some cases making servicing foreign currency denominated debt more difficult. Moving on from pandemic news to other major news stories, an ambitious plan for 15 West African countries to adopt a common currency has been pushed back to 2027. The Economic Community of West African States said in a statement on Saturday that the ECO, which was meant to have been launched in 2020, was delayed by the coronavirus pandemic and its aftershocks. The ECO West African States Commission President Jean-Claude Cazibrou said that they now have a new roadmap and the new convergence path will cover the period of 2022 to 2026. They'll be launching the ECO in 2027. The West African bloc has been pursuing a common currency project for more than 2 decades to help remove trade barriers, ease the cost of doing business and boost economic growth in the region of more than 380 million people. Within the bloc, 8 countries that already share the CFA franc have started reforms of their own ahead of the wider currency project. Now it's time for a short break. Stay tuned, I'll be back in just a moment.
Tune in to get the latest information.
Whether it's about market movements or the currency graph,
Sectoral coverage or industry news.
we cover it all on our news segments.
Be on top of the latest news
With Kalkine TV.
Hello and welcome back. I'm Rachel and you're watching Kalkine TV live from Sydney. This is the Economic Corner Show. Let's look at some important economic data announcements now. Asking prices for British homes between mid-May and early June rose by 0.8% compared with a month before. Property website Rightmove said that this is the biggest rise for the first time of the year since 2015, as available housing remains in short supply. The increase is less than the 1.8% recorded a month earlier, but still takes asking prices 7.5% above their level in early March 2020. That was before the UK went into its first COVID lockdown. Meanwhile, Australian retail turnover rose 0.1% in May. That's according to preliminary retail trade figures released today by the Australian Bureau of Statistics. Ben James, Director of Quarterly Economy-Wide Surveys, says there were mixed results across the industries and states and territories, with COVID-19 restrictions in Victoria impacting the May result. Victoria fell 1.5% as the state entered its fourth lockdown on May the 28th, with trade restricted for physical stores. Victoria saw falls across all industries except for food retailing, where spending increased in the lead up to the lockdown in the last week of May. The falls in Victoria were offset by rises in Queensland, that was 1.5%, and Western Australia also at 1.5%. Nationally, at an industry level, food retailing led the prices, offset by falls in household goods and retailing, and clothing, footwear and personal accessory retailing. Moving on now to the important economic events that are lined up for the week. The Bank of England will give a fresh monetary policy update this week as inflation pressure starts to build up. Elsewhere, Purchase Managers Index data comes from the US, the UK and the EU. OPEC and allies have a busy week with another range of policy deciding meetings kicking off, and the UK Central Bank will deliver its latest monetary policy decision against a backdrop of fast economic growth and rising inflation. Governor Bailey has repeatedly stated in the past that if prices consistently outstrip the Bank of England's 2% inflation target, he'll have no problems tightening up policy. The Bank of England's base rate has remained at 0.1% for the last year as part of the range of emergency pandemic economic measures enacted by the bank. Consumer price inflation rose 2.1% on an annualised basis in May. That's according to the Office of National Statistics figures released last week. Month-to-month inflation clocked in at 0.6%. Turning to data now, Purchasing Manager Index readings from the US, UK and EU are all released this week. All these major economies will be looking to build on May's impressive momentum. May was also a good month for Eurozone business activity. IHS Markit's composite EU PMI reached a 3-year high with a score of 57.1, comfortably above April's 53.8. Sticking with the data, the final reading of US first quarter growth is also due this week. And away from raw economic data, OPEC and allies are set to gather on Thursday for a series of meetings. Any unexpected spikes in production output, as opposed to OPEC's current steady tapering program, could result in an oversupply. Despite confident global demand recovery forecasts, OPEC decided in April to return 2.1 million barrels per day of supply to the market between May and July. The cartel is sticking with its optimistic oil demand outlook. Its June monthly report states demand would rise by 6.6% to hit 5.95 million barrels per day in 2021. The forecast was unchanged for a second consecutive month. Well, that's all from me for now. Keep watching Kalkine TV as we bring you the latest news and trending market updates live from Sydney. I'm Rachel, signing off for now.